Can the crypto markets finally get regulatory clarity from the United States? We're here to talk about this with Anthony Georgiades. He is a co-founder of Pastel Network. Welcome to the show, Anthony. Good to see you.
Thanks for having me.
Before we get to the bill itself, I want to ask you, does it really matter for the markets? Because the new bill that we'll talk about in more detail, that was supposed to provide hope that regulatory clarity is coming to the U.S. However, I'm looking at the Bitcoin price, still below 30K, still hasn't broken out. On the surface, it looks like markets are not satisfied or at least don't feel convinced yet. Or maybe this has no impact on the markets. So I'll let you comment on that first.
Well, listen, there's still a lot to happen, right? First, getting past the House committee is a major win in of itself. Still need House approval, and obviously, still need to get through the Senate and the White House itself. I think generally speaking, this is very positive for the markets overall, in the near and long term, more particular, because matter of fact is this is probably the first time that you have a significant amount of Democrat lawmakers really showing their willingness to basically stand against their party with more of a bipartisan approach, reject the status quo, and adopt some sort of clear regulatory framework. And to your point, the U.S. has long grappled with the challenge of establishing clear digital asset frameworks in terms of regulatory understanding. And we've missed tremendous amount of growth opportunities presented by Web3. And we've had emerging markets that have, to some extent, found themselves ahead of the curve. So anything that the U.S. does moving forward to establish a clear regulatory framework should be seen as extremely positive. We're no longer going to miss out on some of the innovation that might move offshore. We're going to continue to spur adoption from players who otherwise might have stayed on the sidelines, whether that's institutional players, more retail adoption, more honestly day-to-day usage, buying goods and services via digital assets because there's clear regulatory framework in terms of how it should be taxed, things like that. These are all positive for the crypto markets over the long term.
Yeah, the bill is very comprehensive. It's about 200 pages long, so I'll put a link to that in the description if people want to check it out in more detail. Was there anything in particular that stood out to you that could drastically or dramatically change the way crypto industries are operated within the U.S.?
Generally speaking, right, you have one effort that's setting up a wide-ranging rules for the industry. This is extremely important with respect to both how digital assets are classified, and who is actually in charge of classifying those assets. Are they securities? Are they commodities? How should they be treated for tax purposes? What is the actual extent of regulatory oversight by certain agencies such as the SEC or FinCEN or the CFTC? These are all extremely important aspects that are going to emerge from this legislation in and of itself. One of the biggest reasons why there's been such a problem and why the U.S. has been in crosshairs as it pertains to regulation has been that there are so many regulatory bodies, the ones I mentioned. Then you have state-by-state legislation, whereas a lot of other nations don't necessarily have this issue or they've set that clear framework up front. Another thing is really the addressing of stablecoins themselves, what stablecoins are, what they aren't, preventing things like the Terra collapse. Again, right, what are some reserve ratios required for stablecoins to exist and how they can actually be adopted? Another is really some of the AML requirements. Again, this is going back to the point of protecting the consumer and protecting the investor. The whole reason why the SEC is there to begin with, protecting obviously retail investors and individuals. So really actually establishing the framework of what sort of KYC and AML policies need to take place. All these things to me, as you mentioned, a 200-page bill, but I think it's very comprehensive and it lays out how we will govern crypto, how the U.S. will operate as it pertains to digital assets. And, I'm optimistic, obviously, cautiously, that this will continue to move along.
One of the major changes that new crypto projects will have to be registered. Very detailed information on the founders and the companies behind this project or the new project will have to be submitted to the regulatory authorities. Let's talk. We're speaking today on Wednesday, the 2nd of August. Over the weekend, a new project emerged, BALD, B-A-L-D. Some suspect it has links to Alameda Research and Sam Bankman-Fried, not confirmed. But anyway, it got pumped and rugged in the same weekend. Now, how do we prevent this from happening? How can regulators prevent something like this from happening? Again, it seems to be happening on a regular basis, but again.
Yep, absolutely. Listen, there's been this sort of pump and dump aspect of assets, scams, frauds, whatever it might be, in every single asset that has existed, whether it's public equities, commodities, foreign exchange, debt, real estate, whatever it might be. Digital assets are not isolated from that whatsoever. Now, to your point, how do we prevent this from happening? And it goes back to that same exact thing: regulation. If there were clear regulatory guidelines established for how new tokens could be issued, some of the actual diligence checks, KYC processes before a token could get listed on an exchange, preventing basically some of the anonymous teams from emerging that can effectively ghost projects overnight. Right now, we don't have that. And once we establish that regulatory framework, I think that you'll see that there will be a lot more innovation and long-term value generation created from these projects, whether outside of basically these overnight pump and dumps.
What do you think the information needs to be submitted to regulators if you're a new project? For example, if you're a consumer and you're a potential crypto investor and you want to look up information about a new project, what do you think, or what would you like to see that would help you make the decision whether or not to invest?
Mm-hmm. Well, the interesting aspect as it pertains to digital assets versus, let's say, traditional private venture capital investments that require some sort of Reg D filings and things like that. What's interesting is in the world of venture capital and private assets, a lot of times you have accreditation requirements pertaining to certain investors. Basically, understanding that investors could lose all of their money in a specific project. So first is really sort of the actual wall, the Chinese wall that's put in front of certain assets that are high risk, potentially high reward as well, that are really value at risk at their nature, and preventing certain investors coming in that might not necessarily have the tools or sophistication to be able to discern between specific assets. Now, to go a little bit deeper, right? If you were actually going to go do one of these filings, there's KYC AML checks on the founding team. There are audits that were required for both financials and some of the actual underlying technology itself, risk assessments that happen on an annual basis, things like that that are required. Not to say that these should be treated like public equities per se, but public equities require annual audits from a big four, right? So there are a number of things that we can do for information that's required to really protect investors over the long term. And I do think that at this point in time, something is better than nothing. And I think that the regulatory framework that's coming will really help propel this forward.
Okay, so are there any aspects of this bill that you think would provide challenges to on-ramp and perhaps slow down crypto adoption from the masses?
As with any new regulatory bill, there are certainly going to be potential headwinds in place that could adversely impact both the growth and adoption in a way that wasn't necessarily intended. You have both the stablecoin bill and the money laundering amendment. As we obviously saw in the infrastructure bill that was passed by, or that was put into place by the White House a couple of years ago, there were certain encumbrances around what was really considered a broker dealer, and it overreached into certain players like potentially crypto miners or stakers. And that obviously made it not feasible to really mine or conduct certain operations in the digital asset realm if that had gone into place the way that it was designed. So as it pertains to this bill, I'm looking into a couple things as it pertains to both the stablecoin aspect and money laundering requirements that could potentially have overbearing or potentially encroaching impacts on adoption. But again, I do think that we're far way away from this actually passing. And cautiously optimistic once again that by the time it gets to that point, the House, specifically with many crypto advocates, will carefully evaluate and reassess the bill as it stands today and make sure that once it does come into place, we'll have clear regulatory framework that will do nothing more than propel innovation and adoption.
One interesting aspect of this proposal is that crypto payments of goods and services under $200 get a tax exemption. Some speculate this could pave the way for using cryptocurrencies as a method of payment on a wider scale. Is that next, you think?
Look around the world. Look around the world, right? People are using digital assets and third world economies on a day-to-day basis to buy coffee, to buy goods, to buy products, whatever it might be, day-to-day exchanges. Bitcoin is one of the least volatile assets in the world if you look at sovereign state currencies that exist around the globe, right? Obviously, in a first world economy, it's hard to really even fathom that. But when you're dealing with hyperinflation around the globe, and the currency that the beer that you're buying at the bar doubles in price between when you open and close your tab, that's a problem, and that's problematic. And that's why there's been such strong adoption in those areas. And to your point as well, because they have had the regulatory framework to adopt it, a local bar doesn't necessarily need to be concerned about the tax impact. Am I getting taxed on this as property, in kind, the security, commodity? Do I even want to take this? Right. And so those types of things are extremely positive for the broader adoption of digital assets.
There was a clip circulating on social media. Actually, it was an older interview with the Uber CEO, and he was on Bloomberg last year.
We're preparing for an onslaught of crypto and metaverse ads, and I'm wondering if any of this has convinced you. Is there any chance of Uber accepting Bitcoin in the future? Are you having conversations about this internally? Like, could it happen someday?
It definitely could. We're having conversations all the time. I think right now what we see with Bitcoin and some of the other cryptos, that they are quite valuable as a store of value. The exchange mechanism is expensive. It's not great for the environment. As the exchange mechanism becomes less expensive, becomes more environmentally friendly, I think you will see us lean into crypto a little bit more. So we're absolutely watching it. And if you say, is Uber going to accept crypto in the future? Absolutely, at some point. This isn't the right point, but we will.
What needs to happen to change his mind? And I think a lot of companies share his sentiment.
Some of the major trends that we're seeing and probably most excited about, and they're really taking the forefront, are scaling solutions. And these technologies extend basically, in essence, the base layer potential of the core blockchains and some of the core coin transactions, Bitcoin, Ethereum, Solana, while inheriting their security benefits. If you look at technologies like optimistic rollups or zero knowledge rollups, they help exponentially boost transaction throughput while slashing costs, making transactions off-chain effectively while ensuring on-chain validity via methods like fraud-proof unlocks, etc. And this is going to unlock a new wave of scalability overall, cost reductions and whatnot. And we're starting to see that happen. Let alone, you already see certain blockchains that have extremely cheap transaction fees. And as these L2 solutions scale, right, we're going to continue to see more efficient data storage, accessibility, and cost reductions.
There are two sides of the argument in terms of what somebody should adopt. Now, there's the crypto is for everybody, all cryptos. There's some use cases for every situation camp. And there's also the Bitcoin maxi camp that believes that Bitcoin is the only digital asset worth looking into. Every single other altcoin or project is really just trying to replicate the fundamentally good aspects of Bitcoin, which is a decentralized digital asset that can't be controlled, finite supply, and has long-term sustainable growth value. So nothing else is worth looking into. How would you respond to that argument?
The Web3 stack is massive, and there are obviously Bitcoin maximalists that exist. When you look at effectively what Web3 really is and what it's meant to be, from a safe haven perspective, from an asset that is sufficiently decentralized and that is completely permissionless and trustless and cannot necessarily be susceptible to any sort of manipulation. There's Bitcoin, and nothing else. So I do agree with that sentiment to an extent. That being said, the Web3 world and landscape is enormous, and there is a need and demand for a variety of players. New innovative layer one blockchains, application specific blockchains with dedicated functionality, computation, or network resources, layer two scaling solutions for the reasons that I mentioned, data availability solutions like Arweave or Pastel, blockchains that are more susceptible to interoperability as a new norm. If you look at IBC-enabled chains, for example, and then something you touched on as well, we'll reach a point in time where we might need to have environmental sustainable in blockchains overall. So I do think at this point in time, while Bitcoin does serve as a great safe haven digital asset with certain innate features of being, digital energy or digital gold or whatever you want to call it, to me, Bitcoin is Bitcoin. And then there's really everything else that serves a very specific, unique purpose, whether that's transacting in financial derivatives, whether that's NFT applications, whatever it might be.
For the future of on-ramping new crypto users, you've got decentralized exchanges, wallets, self-custody, like you discussed, and then there's traditional CeFi exchanges. Most recently, Binance and Coinbase have been under fire by the SEC. But if you were to look ahead, which avenue do you think would gain the most momentum? Or perhaps there's a new avenue that I haven't mentioned yet.
I don't necessarily think it's one or the other. I think that each of these different avenues serves a very unique use case and purpose. There are certain users that honestly want to abide by the entire ethos of crypto and only self-custody or leverage non-custodial solutions. They're only going to stake their assets on DPoS protocols if they're purely non-custodial to some respect, while others might be more inclined to leverage certain centralized solutions for lending and whatnot. There might be certain on-ramp and off-ramp providers that have certain institutional frameworks that abide by them, that really are the backbone of their product and offering, and they're much more comfortable leveraging those tools and protocols.
So finally, let's talk a little bit about Pastel Network. What is your mission in terms of promoting or advancing the NFT and Web3 spaces?
Mm-hmm. So Pastel has a commitment to really building Web3 infrastructure that is, from our perspective, what we view as one of the largest foundations to solve a number of challenges in the evolving Web3 space. We basically we are an application-specific layer one blockchain, and we're operated by a series of validator nodes that really provide very, very, very specialized resources. One is our permanent decentralized storage layer. The other is our new duplicate NFT detection protocol. And these are run in highly sophisticated ways around the world where anyone can access them using our open Web3 APIs, whether you're an existing layer one, whether you're an L2 scaling solution, or whether you're a third-party DApp or NFT marketplace. You're able to tap into our ecosystem and get access to a network that provides that permanent redundant storage, as well as other functionality and features that I mentioned.
Well, where can we learn more about Pastel?
Certainly follow us on Twitter at Pastel Network. You can definitely join our Discord as well, which is linked on the Twitter account, really just to stay up to date on all the latest news, advancements, and features.
Excellent. Well, thank you very much, Anthony. We'll put the links down in the description below. Follow Anthony's work in Pastel Network. Appreciate your time. Thank you.
Thank you.
And thank you for watching. I'm David Lynn. Stay tuned for more, and don't forget to subscribe.